we have this affordability challenge that, based on interest rates, also very difficult from an affordability standpoint. So just want to acknowledge that it's not easy, and really kind of reminds me of a period of time back in 2008 when the housing market was collapsing, and I had just bought a house. I had spent all my money to renovate the property, and I had a new baby. My income had dropped, and I wasn't sure how I was going to be able to make my mortgage payment, honestly. So at the time, lenders were offering to do some modifications. I was able to get a loan modification, and that ultimately allowed me to save my house, which eventually became a big kind of safety net for me. The house became a meaningful asset for me and my family. And so what I know to be true is that the homeownership journey, those of us that are able to kind of embark on the journey and find some success and start to build equity, it is an incredible way to build a future for yourself and your family. And so it's something that we're just really passionate about here. And it's why we've aligned with CalHFA. We love the programs that they're offering, the Dream for All program, as well as their other down payment assistance programs. So we're excited to talk about that today. And also just to be an advisor to you guys as you go through the process. So throughout the conversation, we're going to put some links in the chat to allow you to connect with us if you need more information, a little more education, and some guidance on your journey through this process. But also, if you have questions, please throw them in the chat. We're going to be responding to the chat as quickly as we can. We have a number of team members here that are going to be responding to the chat. So know that you'll have some connection through the chat process. The direct messages don't get shared to the whole audience. So I would encourage you to use the chat feature so my other teammates can view the questions. And last but not least, if you do speak Spanish and you need some Spanish assistance, we have a Spanish speaker that's also attending. So just put your questions in Spanish and we'll try to get to those as well. So thank you guys so much for being here. And now super excited to turn this over to Natasha Dowdy. She's with CalHFA and just really excited to share this information with you guys. Natasha, welcome aboard.
Thank you. I know your time is very valuable. And my name is Natasha Dowdy, and I am with the California Housing Finance Agency, also known as CalHFA. There's some great information that I'm going to share with you today. But before we take the dive into the programs that we offer, I want to point out some key information here on the screen. First is our website. Our website is calhfa.ca.gov. Please write our web address down. There's a lot of information on our website, a lot of videos, education courses that you'll need if you are looking to receive down payment assistance from CalHFA. Tons and tons of information, all listed on our website. And that web address is calhfa.ca.gov. And I'll go over our web address again later on in the presentation, but I just wanted to make sure that you have that written down, ready, so that after we end the presentation, that you can go out to our website and check out all the information available for you. But to start, who is CalHFA? CalHFA, we are a state agency. We were founded in 1975 with a mission to invest in diverse communities with financing programs that help more Californians have a place to call home. Our goal is to increase homeownership throughout the state of California. And as you all know, as Darren touched, that the cost of living, the purchase prices are on an all-time high, interest rates are high, and it's making it more difficult for individuals to save money and put money aside to come in with a down payment. And that's where CalHFA comes into play. We offer special financing and down payment assistance to low and moderate income individuals. And our passion, our goal is to increase homeownership throughout California. Now, as I mentioned, we are a state agency. However, we are a self-funded state agency. And basically what that means is we do not rely on the taxpayers funds to fund our programs. However, there are specialty programs that we offer where we act as the administrator on behalf of the state. There are specialty programs that the state will allot funds to go towards special programs, such as the Dream for All Shared Appreciation Loan Program and the Accessory Dwelling Unit ADU grant program. That program is no longer available, but those are specialty programs where we do get funding from this state. But the first program that I'm going to talk about today is our My Home Assistance Program. This is a program that's always available. We never run out of funds on this program. It's always available. And I'm going to go over what the My Home Assistance Program is, how it works, and just so that you know that this program is available to you if you are an individual that wasn't selected for the Dream for All program, or if you don't meet the requirements of the Dream for All program. So we'll talk about My Home Assistance, and I'll explain how that program works. Then I will go over the requirements of the program, and then we will cover the Dream for All Shared Appreciation Loan Program to help answer all the questions that you have for that program. So to start, the CalHFA programs that we offer are down payment assistance programs. So as you may know, when you're purchasing a home, the lender may want to see that you have skin in the game. They want to know if you have a down payment to contribute with the purchase of your home. And that's where CalHFA comes into play, because sometimes you may, the cost of living is so high, it may be difficult for you to set aside funds to meet your down payment requirement. And at CalHFA, we offer the My Home Assistance Program. My Home is a loan. It's not a grant, and it's not forgivable. It is a loan used to help you meet your down payment requirement. It can be used to cover your down payment and or closing costs. It just depends on how the loan is structured to help you meet your needs. Our My Home Assistance Program can be combined with a Fannie Mae conventional first mortgage, or an FHA first mortgage, or a VA or USDA first mortgage. It just depends on how the loan is structured, or what you are approved for, the type of loan program that you're approved for. So if you're utilizing the My Home Assistance Program and you're combining it with a conventional first mortgage, VA or USDA, My Home Assistance can go up to 3% of the purchase price or appraised value, whichever's less. Now, if you're utilizing a FHA first mortgage, My Home Assistance can go up to 3.5% of the purchase price or appraised value, whichever's less. Now, as I mentioned, My Home Assistance is a loan. It's not a grant, and it's not forgivable. So My Home has a 1% simple interest rate. And basically what that means is the interest doesn't compound daily. So while you're in the loan, the interest would accrue annually, and you'll always know what the interest payment that's being added to the original loan balance is. So I'm going to give you an example. So if you borrow $20,000 on the My Home Assistance Program, it's a silent second on your loan. So that $20,000, how that interest would accrue on that loan is $200 each year. So in year one, $200 would be added to the original loan balance, and in year 5, $200 would be added to the original balance of your loan. While you're in the loan, you do not have to make a payment. The payments on the loan are deferred. So you could be in the loan, you don't have to make a payment, and the underwriter doesn't need to hit you for a payment on the My Home Assistance Loan Program. You're simply just meeting the program requirements of the first mortgage and a few of our program requirements for the My Home Assistance program. So as I mentioned, the payments are deferred. There's no prepayment penalty. So while you're in the loan, you can opt to make a payment on the My Home Assistance program, but it's not required. There are a few events that would cause the My Home Assistance loan to become due and payable. So if you're in the loan and you decided to refinance on your first mortgage, My Home Assistance would become due and payable. Or if you decided to sell your home, or if you did nothing and waited the full 30-year term, My Home Assistance would become due and payable at the end of the 30-year term, or if you decided to sell your home. I'd like to put the numbers in the program, give you an example of how this program can work. So let's say that you received a CalHFA FHA first mortgage and My Home was in second lien position. In this scenario that I'm pointing out to you on the screen, you'll see that the purchase price is at $500,000. That would give you a first mortgage loan amount of $482,500. My Home Assistance, remember, on an FHA first mortgage can cover up to 3.5% of the purchase price or appraised value, which in this scenario comes out to $17,500. So My Home is covering your complete down payment requirement on the My Home Assistance program. So when you're purchasing a home, you have closing costs. And I estimated the closing costs to be 3% of that purchase price. So that equates to $15,000. And there are times where you can try to get a seller credit from the seller, where the seller issues a credit to help cover some of your closing costs. So in this situation, the seller issued a seller credit of 2.5%, which equates to $12,500. So with this scenario, you as the home buyer, you would be expected to come in with $2,500 because My Home was in place to help cover the down payment requirement for this program. And with My Home Assistance, you can also if you have funds set aside, you can also use your savings, your 401k to further give yourself a larger down payment in conjunction with the My Home Assistance program. We don't put a cap on the amount of borrower-owned funds that wants to be applied to the down payment to further give you a larger down payment. But that's an example of how the My Home Assistance program could work on a FHA first mortgage. It's covering that full down payment requirement. But of course, as always, when there's a loan in process, there's always borrower requirements that you have to be aware of. So whenever you're utilizing our down payment assistance, we have a minimum credit score requirement that the borrowers have to meet. So if you're utilizing a government first mortgage, which is FHA, VA, or USDA, we're looking to see that the borrower has a minimum credit score of 640. Now, if you're utilizing a conventional first mortgage, and this also applies to the Dream for All, because the Dream for All would be used in conjunction with the conventional first mortgage, we are looking to see that the borrower has at least a 680 credit score. Now, I would like to add that we will go down to a 660 credit score for those that are considered low-income borrowers. So if you are earning 80% or below, 80% AMI or below, you are considered low income, and we would allow you to have a 660 credit score. However, if you are above the 80% AMI threshold, we would look to see that your credit score is at least 680. Now we do ask, we are going to look at your debt to income, and basically that's capturing all your monthly gross income divided by all your monthly debts reported on your credit report. So it's important, it's crucial. If you're in the market and you're considering purchasing a home, it's crucial that you avoid financing any new fancy cars or a fancy boat while you're in the process of purchasing a home, because we're going to look at your debt to income to make sure that you're within the program limits. So if your credit score is below a 700, we want to see your max debt to income at a 45.00. Now, if you have a credit score 700 or above, we will increase that debt to income to a 50.00 debt to income. So we understand that, those individuals that have a good credit history and they have that history of managing debt, that's where we have that threshold where our debt to income can go a little higher, which is that 50% debt to income. Now, when you are applying for a CalHFA down payment assistance loan program, we ask that all borrowers on the loan meet our definition of a first-time home buyer. And let me explain what our first-time home buyer definition is. It's no ownership interest in your primary residence within the last 3 years. I'm going to repeat that. So that's our definition of a first-time home buyer is no ownership interest in your primary residence within the last 3 years. So essentially, you can have a client or you can be a home buyer that has recently owned a home, or you currently own an investment property. We're looking to see that you haven't resided in that property within the last 3 years. So if you own an investment property and you haven't resided in that investment property in the last 3 years, you could still be classified as a first-time home buyer. Again, additional documentation would be needed, and a CalHFA approved lender would then ask that you supply additional documentation proving where you resided that's separate from the home that you own. In addition to being a first-time home buyer, we also require that you complete our home buyer education course. Now, it's an 8-hour home buyer education course. There's links on our website that you can access to take the course. I highly recommend if you know you're in the process of obtaining a CalHFA loan program, make sure you complete the homebuyer education course. There is a fee of $99 to complete the course. And once you complete the course, you will be issued a certificate. That certificate is good for 1 year. Only one borrower on the loan must complete the homebuyer education course. So this is there in place to make sure that you are a successful home buyer. So things that you'll learn in this homebuyer education course is you'll learn the mortgage process. You'll learn how to budget after the loan closes. You'll learn what to expect after you're in this home, and how to budget to maintain your property and maintain home ownership. And I think that's a really great tool because, yes, you're getting into this loan. This is a big financial decision. You want to make sure that you're successful. We want to make sure that you're a successful home buyer and you maintain home ownership. In addition to the requirements that I mentioned, we also have income limits. And I believe our income limits are very moderate. You'd be surprised. Here's a quick example of what our income limits are. I've listed a few counties here, and these income limits are specific to the MyHome Assistance program. If you're planning to purchase in LA County, your income would need to be at or below $194,000. If you're looking to purchase in Orange County, we're looking to see that your income is at or below $250,000. If you're looking to purchase in San Bernardino, Riverside County, we're looking to see that your income is at or below $187,000. In San Diego County, we're looking to see that your income is at or below $231,000. Now, we're not looking at the household income size. We're only looking at the income of the all borrowers on the loan. So we're looking at what the underwriter used to qualify your income. So we're taking the total qualifying income of all borrowers on the loan. So if you're looking to purchase in a county that's not listed on this screen, please visit our website. We have an income chart, or contact a CalHFA approved lender. We have, of course, we have Darren at NEO. He's with Luminate Home Loans, NEO, DBA of NEO. So contact him. He'll let you know whether or not you are within the income limit per the county that you're looking to purchase in, and he'll determine if you meet the program requirements. But I think our income limits are very moderate. I think it's very doable, and it's reasonable. It's very reasonable, especially in this market. In addition to our income limits, we also have property requirements. We will lend on a single family residence. We will lend on a condo, a townhouse, and even a manufactured home. We just do not lend on 2 to 4 unit properties. And basically, that's a duplex or a triplex or a fourplex. We do not lend on multiple units, but we will allow the single family residents to have a accessory dwelling unit. Sometimes they're calling them accessory dwelling units, ADU, a granny flat, or a pool house. We will allow the single family residents to have that addition of the home. It's just the appraiser has to identify that single family residence as a 1 unit single family residence. So that's key. Another takeaway for our programs is that we need to have all borrowers on the loan occupying the property as their primary residence. So if someone's going on the loan, we will not allow a co-signer or a non-occupying co-borrower. All borrowers on the loan must intend to occupy the property as their primary residence. But we will allow that single family residence, condo, townhome, or manufactured home. So, I think that's a great opportunity to obtain that home ownership. We also will require a 1-year home warranty because we want to make sure that once you get into the home, that you are protected, because if you're currently renting right now, you may be used to having your landlord come and fix things that break. So that first year is very viable. We want to make sure that you're protected and you have that 1-year home warranty in place. We just want it to be a basic 1-year home warranty that covers the HVAC, hot water heater, and stove and oven. I don't know if you're aware, but if your HVAC goes out, that can run you $20,000 to $30,000. By having a 1-year home warranty in place, you can look to pay an estimate of $1,500 to replace the HVAC if you have a 1-year home warranty in place. So that's CalHFA looking to make sure that you are a successful homeowner. So, but if you are looking to purchase a new construction home, we will waive the 1-year home warranty, because when you're purchasing a new construction home, the builder, they have their own 1-year home warranty in place for that new property. But just things to consider, and to think about, because we want to make sure that you are a successful homeowner, when you're utilizing our CalHFA down payment assistance programs. And I know, many of you, I know I covered our MyHome assistance program, and I know a lot of you are here and on the call because you want to hear about the Dream for All Shared Appreciation Loan Program. And I'm here to tell you, this is a great program. But before I get into the Dream for All Shared Appreciation, I believe, Darren, you wanted to upload your QR code to the slide. Are you able to do that now?
Yeah, one quick sec. We're going to see if we can upload right now.
Okay, perfect. Take a quick little intermission, you guys.
Yeah, and thanks for all the great questions, you guys. We're going to try to get to some of those. Natasha, I know you're presenting, but there's quite a few questions in our chat, so we'll try to tackle some of those at the end. Thanks to everybody for the great questions. A lot of specific questions, but they're great questions. All right, so give me 1 second. I'm going to share screen for a quick sec.
All right, so what we are going to be throwing up on the screen now is a QR code. So we're also going to be putting this link in the chat, but what you guys want to do is there's going to be different buckets of people on this call depending on eligibility and where you fall personally. Everyone's path is a little different. So we have the different categories of where you will fall and action items for each of those categories. So everything that you'll need is in this QR code. Just go ahead and give that a scan and visit that website. We will also be sending a recording and all of this follow-up afterwards, but make sure you guys scan it now. Take action depending on where you fall, and you'll see a quick video of Darren also running through all that information. Darren, anything to add there?
No, no, I mean, there's some great questions in the chat. So we'll try to tackle as many of those as we can. A lot of them are, we'll try to tackle the ones that I think relate to the most amount of people. And then if you just have follow-ups, I mean, you can schedule time with our team. We're really familiar with the program as well as CalHFA's other programs. So we can spend some time on your specific situation. We'll try to address as many of those as we can. Obviously, there's a lot of attendees today, and we're grateful for that. But you can always connect with us through this QR code, as well as the emails that we're going to be sending out as a follow-up. So thanks, everybody. And I'm going to push it back over to you, Natasha, just one quick sec here, and we'll get you back. And this is the part, obviously, that we're all excited about, the Dream for All program. It's incredible. So we'll dive into that. All right, Natasha, you should be back to hosting. So if you can share screen, that'd be great.
Okay, awesome.
I'll let you know once your screen's back up.
Okay.
All right, you're good to go.
Okay, drum roll. What everyone's here for. The Dream for All Shared Appreciation Loan Program. I'm so excited to announce the second phase of the Dream for All program. As some of you may know, we came out with the first phase of this program last year, and the program lasted around 8 to 11 business days. The funds went by very quickly, but the second phase of the program, we made a lot of changes to the program. I'm happy. My team has been diligently working with all the changes and implementing all the new exciting things to come about for this second phase of the program. Just to give you a little information, the Senate Bill 143 has set to establish parameters around the second phase of the program. We are targeting first generation home buyers. And I promise you, I will further unpack that definition of a first generation home buyer. But this second phase of this program, we are making sure that we have an equitable distribution of the funds throughout the state of California. And there's lots of changes. There's lots of changes that have been made to the program. The first change that was made to the program is that we put a cap on the loan amount to $150,000. So it's $150,000 or 20% of the purchase price or appraised value. That $150,000 or 20%, whichever is less, can be used to go towards the down payment and or closing costs. It just depends on how the loan is structured. But that's a larger down payment compared to our MyHome assistance, where it just gives 3% or that 3.5%. The Dream for All shared appreciation gives the borrower a larger down payment to help them afford the home that they want to purchase in this high purchase price, high interest rate market. Now, one of the changes that has come about on the second phase of the program is that there will be a pre-registration process. It's a random select. There will be a random selection. So the Dream for All pre-registration portal opens 8 a.m. April 3rd, and the portal will close April 29th at 5 p.m. Pacific Standard Time. I'm going to repeat that. So the Dream for All pre-registration portal opens April 3rd, and it will close April 29th at 5 p.m. Pacific Standard Time. So that is important. So I just want to make sure that you know that the second phase of the program is not on a first come, first serve basis. There will be a random selection taking place for this program. So essentially, what you'll need to do is you'll need to get in contact with a CalHFA approved lender. And I have Darren at Illuminate Home Loans, DBA, NEO, here on the phone. So if you have any questions, you can definitely contact him and he can get you pre-approved for the program. But you'll need to, the first step that you'll need to do is to contact a lender, a CalHFA approved lender, to determine if you meet the eligibility requirements of the program. But let me briefly explain to you how this program works. So keep in mind that the program title is called Dream for All Shared Appreciation Loan Program. So you have that loan amount that it's either $150,000 or 20% of the purchase price or appraised value. But you have to make sure that you understand that there's a shared appreciation component to the program. So when you are in this, say that you're one of the lucky participants to receive a voucher for the program, and you purchase your home and you're in the home there and you go to pay the loan back, you're paying back the original loan amount plus a percentage of your home's appreciation. And I'll show you an example later in the presentation on how that actually works. But I always want you to know that the Dream for All Shared Appreciation loan program, it is a loan. It's not a grant, and it's not a forgivable program. It is a loan, and you'll always be responsible for the original loan amount plus a percentage of your home value's appreciation. Another one of the changes that we made to the program is that we put a minimum, we have a minimum combined loan to value of 95% and a max combined loan to value of 105%. So essentially what that minimum 95% combined loan to value equates to, that means that the borrower is capped on the amount of funds that they can contribute toward the down payment. I'm going to break that down. So that max combined funds that a borrower can contribute towards the down payment is 5%. And I'm going to break that down on how that, what that means. So of course we have this large down payment of $150,000. But some clients or some borrowers may want to add a larger, some of the funds that they've saved and combine it with the down payment to help further lower their monthly mortgage payment. You can do that, but we put a cap to the amount of funds that you can contribute towards the down payment to 5%. You can also, the max CLTV, that combined loan to value, what that means is that you can combine an outside community second with our program. You just can't combine the MyHome assistance with our Dream for All program or our Cal Plus Zip program. You can't combine those two programs with the Dream for All program. The Dream for All program is designed to be combined with a conventional first mortgage, which means that you have to meet the conventional credit score requirement, which is 680 or 660 for those that are considered low income, and that's anyone earning at 80% AMI or below. Now, the Dream for All program has specific income limits, and I'll show you what those income limits are. A quick example of what the income limits are in the same counties that we looked at for the MyHome assistance program. As you can see, LA County, the income limit is slightly lower. It's $155,000. So if you're looking to purchase in LA County, your income would need to be at or below that amount. For Orange County, it's $202,000. So if you're looking to purchase in Orange County, you would have to be at or below that income limit. San Bernardino or Riverside, as long as your income is at or below $149,000, you're within the income limit. San Diego, $185,000. And we're looking at the income of all borrowers on the loan. So if there's any counties that you're looking to purchase in that's not displayed on the screen, please visit our website. And there's a chart on our website so that it lists out all the counties throughout California. But I know that I wanted to talk about the major changes to this program. And I just want to make sure that you are aware that the changes, at least one applicant must currently reside in California, and at least one applicant must meet the first generation home buyer requirement. So a lot of people may may find this requirement a little challenging, but I'm here to tell you that I think it's a great opportunity because we are looking to reach those individuals that may not had a chance of obtaining generational wealth from their family. So we have that first generation home buyer requirement, but it's only one applicant on the loan that must meet that definition. And I'm going to further break down that definition to you. So if you are an applicant and you think that you are a first generation home buyer, you must look back within 7 years. If you have not owned a home or been named on a mortgage within the last year, yes, you possibly meet the definition of a first generation home buyer. But you have to take it a step further because we want to look at your parents. We want to determine and we want to see, does your parents currently own a home? And if they currently do not own a home and you haven't owned a home in the last 7 years or been named on a mortgage, you meet the definition of a first generation home buyer. Now, if your parents are no longer living, if they owned a home at their time of death, unfortunately, you would not qualify as a first-generation home buyer. And I want to repeat that. So if your parents are no longer living, and when they passed away at the time of death, if they owned a home, you would not qualify as a first generation home buyer. But if your parents are no longer living, and at the time of death, they did not own a home, and you haven't owned a home within the last 7 years, you meet the first generation home buyer requirement. We've even taken it a step further, and we're reaching out to anyone that has been placed in foster care. If you've been placed in foster care and you have valid documentation to prove that you were placed in foster care, you don't have to answer the questions about your parents. We will just look at the documentation, any valid, acceptable documentation to prove that you were placed in foster care, and we would ask you the question on, have you had any ownership interest in a property within the last 7 years? Please, if you have any questions regarding the first generation homebuyer requirement, please add that to the chat. I'm here and available to answer all questions that you may have surrounding that definition. But keep in mind, only one applicant on the loan must meet the definition of a first generation home buyer, but all borrowers on the loan must meet the first time home buyer requirement. A lot of information to unpack, but let's look at a scenario.
Natasha,
yes.
Natasha, real quick, just a couple questions. I'm just going to hover on real quick because there's a few questions about divorced parents or parents that were in the foster care system, if that's a possibility, if they can prove that, or if the parents haven't lived in the U.S., how do they prove they don't own a home? Could you answer those real quick?
Sure. So if your parents are divorced, we're still going to look at mom and dad. Does mom and dad own a home? Just because mom and dad divorced, that doesn't mean that they divorced the child. So we're looking at biological or adoptive parents when asking that question on if the parents currently own a home. Now that home, they can own a home outside of the country, but they cannot own a home within the United States. Now, your next question you asked, I'm sorry if you could repeat the other questions surrounding
I'll come back to
the
it, but
parents.
one other question was, mother doesn't own, father's passed away and was a homeowner at the time of death. Would that be an option?
Unfortunately, no, because father owned a home at time of death, that would cancel out that particular individual of meeting the first generation home buyer requirement. But we only just need one applicant to meet that definition. So maybe perhaps someone else could go on the loan that's planning to occupy the home as their primary residence that may qualify and meet the definition of a first generation home buyer.
Great question. And I think a travel trailer would not be considered a property. That would probably be just considered a vehicle, I would imagine.
Right. So for parents owning a home, so a mobile home doesn't consist as real property if it's movable. So what would constitute as real property in ownership is if it's a manufactured home on a permanent foundation and the individual owns the land. But if it's on in a mobile park community, if they pay mobile park rent, or if they don't own the land, or if it's not affixed to the permanent foundation, then it's not considered real property.
Okay, and then if parents are on the deed but not on the loan, I'm assuming they would be considered owners. Another question.
Right.
Sold a home 6 years, 9 months ago. I think you said 3 years on this program, or is it 7? It's 7 years on Dream for All, right? Is that?
So we're only that 7 year look back is only for the applicant. The applicant. Now, if the parents owned a home last year or 6 months ago, then they sold it, we're only for the parents portion, we're only looking at currently. Do they currently own a home?
And even if they're estranged from parents, they don't have a relationship, don't know where they're at, they're still going to go through that due diligence process, I assume.
Yes. So I'll show you where you're going to register for the portal, but the portal will ask questions about your parents. They're going to add the portal. There's a section that's going to ask, to the best of your knowledge, your parents' first and last name, date of birth, and current address. And it's to the best of your knowledge. So when you're entering in this information, just, please be truthful and honest. Please avoid falsifying any information. You want to make sure that you give as much information as possible. And there's another screen that I'm going to get to that I'm going to go over the documentation that you need to gather to prepare. But to the best of your knowledge, please enter your parents' information, as much information as you have on your parents.
That's great. Thanks for that, Natasha. Appreciate it.
No problem. Any other questions? Because I know this definition is it's a lot.
I think we're okay on that. I think based on the Q&A, I mean, there's quite a few questions on it, but I think we're okay for the time being. I'll consolidate some more so you can get through more of your content.
Okay, no problem. So here is a quick example of how the Dream for All shared appreciation works. So let's say, I know it's a lot of numbers, but hang in there with me, you guys. So say that you purchased your property at $500,000 and you obtained the Dream for All shared appreciation loan, and the percentage that you received was 20% of the purchase price. So that would give you a loan amount for $100,000. So you use that $100,000 to cover your down payment and or closing costs. And now you're in the loan. You're in the home. You got your keys. You closed on the loan. You're living your life in this new, beautiful home that you've hoped for. And years have gone by. Maybe 5, 6 years have passed. And now you have decided to sell your home. And the home value is now worth $700,000. When you originally you purchased the property for $500,000. So that's a difference of $200,000 that your home appreciated in value. So because you borrowed that 20%, the share of appreciation that you have to share and pay back is you're going to take that $200,000 multiplied by the 20% that you had borrowed. So that would equate to $40,000 that you would have to pay back for that share of appreciation. So you're always originally going to have to pay back the original loan balance plus a percentage of your home's appreciation. So in this example, when you go to sell your home, you're going to pay back the original loan amount plus with the original loan amount of $100,000 plus that $40,000 that figure equated out to. So that's essentially how it works. You also, I'd like to add that you don't have to borrow the full 20%. You don't have to take the full $150,000. You can opt to borrow 10% to help cover the down payment and or closing costs. In that event, your share of appreciation would be 10% of your home's appreciation. It's a 1-to-1 split on how much you borrow. Now, if you are considered a low income individual, there's an advantage to you. So if you're considered low income, you're earning 80% or below, 80%, you're earning 80% AMI or below, your split or your payback, if you borrowed 20%, you would have to pay back 15%. So there's a reduction in the share of appreciation that you would have to pay if you're considered a low income borrower. Now, I know that is a lot of information there, and we highly encourage you, if you are interested in registering for the Dream for All program, we highly encourage you to take the free 1 hour Dream for All education course. If you are selected for this program, it would be required that you show that you've completed the course. You'll need a total of 2 certificates, but right now at this point, all we're asking is we're recommending that you just take the free 1 hour Dream for All education course, because we want to make sure that you fully understand this program. We want to make sure that you fully understand that shared appreciation component, because when you go to sell the home, or you refinance with a cash out, or you wait the 30-year term, that loan plus a percentage of your home value's appreciation will be due and payable at any one of those events. We will allow a one-time resubordination, but you have to be in this loan for 12 months and you have to make 12 timely on-time payments. And that new loan would have to be limited cash out. That's equivalent to a rate and term program. So we will allow a one-time refinance. There's a list of requirements that you'll have to meet. Definitely reach out to a CalHFA approved lender. They'll go over the list of requirements to make sure that you're aware of that one-time resubordination. And basically what that does is it'll allow you to obtain a lower interest rate after 12 timely payments have been made, but you can't take any cash out. And that's without triggering the original loan amount to be due and payable and that shared appreciation component to be due. But let's talk about how to prepare for the pre-registration portal. So as I mentioned, the first thing that you need to do is you need to talk to a CalHFA approved lender. They're going to go over your income history. They're going to look at your credit report, and they're going to ask the questions needed to make sure that you are eligible for the program. If they determine that you're eligible for the program, they're going to issue you a Dream for All pre-approval letter. You'll need to hang on to that letter. And because you're going to need that letter when the portal opens. We are asking that we're not requiring it, but we're recommending that you take the 1 hour free Dream for All education course. So after you take that course, you'll then be issued a certificate. That's basically going to explain to you how this program works. It's going to explain to you how the program works when it's time to exit the program, because that's key. You need to know that before you go signing any loan documents, because this is a unique program. While you're waiting for the portal to open, it's important that you gather these documents for the pre-registration portal. So you're going to have that Dream for All pre-approval letter filled out by a CalHFA approved lender. You're going to need to have a valid government ID. Now you want to make sure your government ID isn't expired. You want to make sure it's a current government ID. We will accept a driver's license, a state ID, a military ID, a permanent resident card, an employment authorization document, just to make sure that we can identify you as the applicant. In addition to that, you also want to make sure you have proof of a current residence. So that could be a government ID. It could be a utility bill, a cell phone bill, or a voter registration. There's a list of documents that we will accept on our website. So go check our website out. But you want to make sure that you have a current bill or something that's current that has your current address on it. And if you have ever been placed in foster care, you want to work on gathering that documentation now. In addition, it's not on this screen, but in addition to the documentation that I have here displayed for you, you also want to make sure that you have a copy of either your birth certificate, school records, or medical records. And this is because once you register to the portal, there will be an audit process. There will be an audit conducted of the information that you entered into the system. So there could be conflicting information that was entered into the system, and they may need additional information from you. So I would definitely work on making sure that you have a copy of your birth certificate just in case they need additional information from you, because time is going to be of the essence with getting back to getting back to any inquiries on additional information. So make sure you have that now and you're getting current copies of your ID or your birth certificate. Have and gather that now so that you're prepared. And again, the pre-registration portal, it opens April 3rd to April 29th. So essentially, you're contacting a CalHFA approved lender. They're pre-approving you. You're gathering these documents. When the portal opens, you're then going to register and upload a copy of your pre-approval letter. You're uploading your government ID, proof of current address, any foster care documentation, if that's applicable. You're uploading that to our Dream for All pre-registration portal. The portal closes April 29th. After April 29th, there will be an audit conducted by a third-party company. They're going to be auditing the information that was entered into the system to make sure that the information is true and correct. We are estimating that a random selection of the individuals who shared their interests of the program, we're estimating that we will make a random selection. This will be a randomized selection. It's a computerized random selection on who gets selected. It will be announced between mid-May or sometime in June. So it's so important that during that time, just you're checking your emails, you're checking your junk folder and your spam folder, and you're registering back into the portal just to see what your status is. If you were selected, or if you were waitlisted, or if you were not selected for the program. So you definitely want to make sure that you are following up and making sure that you know your status for the voucher. But here is a screenshot of our website. Again, there's lots of information on our website. The top box that you see with the arrow, there has a red square around the home buyers. That's where you're going to click to go to obtain additional information regarding the Dream for All Shared Appreciation Loan Program. And that's where you're going to go to register for the portal. So familiarize yourself with this screen. Again, our website is calhfa.ca.gov. I'm going to repeat that one more time. That's calhfa.ca.gov. But there's tons of information on our website. I also have a red box toward the bottom of the screen, and that section is exclusively there for home buyers. There's tons and tons and tons of information on our website. So please visit our website, check out the videos that we have. My team has done an amazing job at creating videos to make sure that you all are knowledgeable on how the program works, and they're all housed on our website. But once you click the home buyers box with the arrow, you'll be taken to this screen, this section of our website. This section of our website has tons of information regarding the Dream for All program. It even walks you through the steps on what you need to do to prepare for the portal when it opens. But to the right of the screen, you'll see a red arrow. That's the section that you need to you need to keep in mind of, because that's where you're going to go to register for the portal when it opens April 3rd. That's where you're gonna go. That button will be live and you can click that button and it'll take you to another screen of the website so that you can enter in all the information that we talked about. You'll upload your driver's license and your proof of address and any foster care documentation in that portal. But that's the area that you'll go to register for the program. Now, let's say you're one of the lucky recipients to receive the voucher. Woohoo! If you are, you will have 90 days to shop for a home, enter into a contract, and have a CalHFA approved lender reserve your loan with CalHFA. So that's key. It's not 90 days to close. You will have 90 days to shop for a home, enter into a contract, and have a CalHFA approved lender reserve your loan. But I want to make sure you guys all know to avoid duplicating your application and to avoid providing false information into the system, because that could just disqualify you altogether from the program. Another key thing that I want to identify is that there's only one voucher per household. So if you're currently living in a situation where you have two roommates living in one house and they both want to apply separately for the Dream for All program, they would not be able to do it because it's only one voucher per household. So please avoid duplicating your applications, trying to increase your chances of receiving the voucher because that could disqualify you from the program. But key information, please check your emails. Check your emails, your junk folder, or log back into the pre-registration portal to find out what your status is. A lot of good information is on our website, so also please check that out. But as we come to an end, I want to recap on the two programs that I talked about today.
Natasha, before we jump to
Yes.
that, can we just tackle a couple key questions in the chat just
Sure.
before we recap?
Sure.
So a couple of questions that I saw, paying off the loan early, right? So if they want to, if they wanted to keep, like, do they ever have to pay off the loan if they keep the home forever? What if they want to pay off the loan earlier? What are their options?
So yes, they can pay off the loan early. So once they do that if they're mainly focusing on the second mortgage, if they want to pay that off early, they can. Once they pay it off, that's when they're paying off the original loan amount plus a percentage of their home values appreciation. But
Wonderful.
they have that option. That's an option. They can do that.
Okay.
There's no
great.
prepayment penalty.
And to confirm, if parents own property overseas, that's okay, right? No issues with that.
Absolutely. There's no issue. So if your parent owns property outside of the United States, and they don't own a home in the United States, that is acceptable.
Okay.
As long as that applicant hasn't owned a home within the last 7 years.
Perfect. And then what about, if they get a voucher, can't find that property in 90 days, what does that look like?
Great question. So we want to make sure that you are making efforts in finding a home. We don't have anything set that says that you can get an exception or that it's extended out, but you want to make sure you're finding a home. 90 days is a long time. You want to make sure that you're out there diligently looking to purchase a home. We want to make sure that you are getting these funds. If you have that opportunity to participate in the Dream for All program, that you're acting on that. You're acting on that because if you don't, those funds could go to the next person that's on the wait list. So you definitely want to make sure that you are finding that home within 90 days. And
Perfect.
it is just entering into a contract. You're just entering into the contract and having a CalHFA lender reserve your loan.
Perfect. Couple more quick ones. What happens with your personal information if you register through the portal? What kind of privacy policy is there? Does that information get deleted? Kind of any of their personal family information?
That's a great question. I'm sure once you register to the portal, there will be a privacy disclosure that you'll read, and you'll see that how they've set agreements, put agreements together to protect your information. But definitely when you go to register, read through whatever privacy disclosures that are in place for you. I don't have that to quote today, but please make sure before you're registering, you read through all the privacy disclosures, that pop-up messages that may come to play. And if you don't feel comfortable participating, then that's definitely your decision.
Perfect. Yeah, there's a ton of great questions in here, and thanks everybody for the great questions. I mean, a lot of very specific questions, and they're great. I mean, really good commentary in the chat. I mean, very, very active. Last one that I'm just going to ask real quick that I saw was, let's see, let me just, if parents' home is owned by a trust, I'm assuming that would still signify homeownership. They're just trying
Correct.
to understand. Okay, so just want to confirm that one. And then what about like the wait list, like kind of the wait list process, or they register, it's a random selection, any other feedback, like how many loans are going to be distributed? I think people are just trying to understand their odds of getting selected. Anything you could share to that?
I love that question. I love the way you guys are thinking. So yes, as I mentioned, we have a total of $250 million. We are roughly estimating anywhere from 1,700 to 2,000 vouchers will be issued for the entire state of California, give or take. So don't hold me to that number, but that's just a rough estimate of how we are anticipating the vouchers to be issued. We're looking at making an equitable distribution of the funds. So each region will have a specific percentage of funds set aside to cover that region. So that's roughly what we're estimating here. Hopefully that answered your question.
If they wanted to pull cash out down the road, they would have to pay off the existing second? Is that how it works?
Yes. So if you need to take cash out, that would trigger the down payment assistance plus the share of appreciation to become due and payable. But we will allow a one-time resubordination, but it's just that new loan would have to be a rate and term, no cash out, and you have to make 12 timely payments. But if you needed to take cash out, you would have to pay back the assistance and plus that share of appreciation that you'd have to partake in.
Great. Let's see. I think there's one other one. We'll see if we can tackle in here real quick. One of the last
Yeah,
questions.
definitely. I love it.
Where was that one? Vouchers. What are my homes? Different county, not an equal distribution, not assuring equity. Okay. Let's see. Sorry, give me 1 second here.
Oh, this is great. I want to make sure I answer as many questions as
weighted by
possible.
counties. I think we talked about that. It's weighted. It's based on the population per county. That's going to kind of identify, depending on how many people are in your county, that's going to determine how many vouchers. So it's kind of a ratio of people to vouchers. They're trying to create an equal distribution. I think you touched on that, right?
Yeah. So we do have percentages in mind, but it's based off of the number of households per county. So as a rough estimate, let's see if I have something that I can refer to help further guide. It's a rough estimate. Please don't hold me to this. And I don't have that readily available at my hands. I believe Orange County is estimated to receive 8%. LA County, maybe 21. Please don't hold me to these numbers because I don't have that information readily and available, but it's based off of the number of households per the county on how we plan to make sure that the funds are equal, are distributed equally throughout the regions.
Sounds great. Sounds great. Val, any questions that I missed that you think needs to be addressed real quick before we move on or wrap this up?
The only one I think that you had commented on was taking equity out of the house at any point for home improvements, maybe a trigger event to repay the down payment assistance.
Yeah, she
Would
did
that
address.
or would that not?
Yeah, that would be an event that would trigger the repayment requirement. So
okay, perfect.
Yeah, that's an important understanding for sure, is that that's not going to be the ideal solution for you. If you're looking to do that in the future, I would explore the other CalHFA programs I think are going to be more maybe advantageous in the future for that.
Right, especially if you're looking to purchase a home and you know that you're going to make improvements or renovations to that home, you might want to consider the MyHome assistance program over the Dream for All shared appreciation loan program, because if your home appreciates in more value, then you're paying back, you're having to share in your home value's appreciation. So, yes, all great questions.
I think that was it. And I know that we didn't get to everyone's questions, but I just want to reiterate, there's going to be a lot of follow-up after this session with the recording and all of the action items that you can take, whether you're just interested in the program or if you know that you're going to qualify. So just keep an eye out for that, an email from Darren with all of those resources. But otherwise, we just appreciate all of you coming, and I'll turn it over to Darren.
And should I recap now?
Yeah, why don't we just do a quick recap, and then I can bring us in for a landing here.
Okay, no problem. So just to recap, I talked about our MyHome Assistance program, and I covered the Dream for All shared appreciation, but I just want to point out the differences of the two programs. So MyHome Assistance is available for first-time home buyers. It doesn't have that component of the first-generation home buyer feature, unlike Dream for All. We need at least one applicant on the loan that meets the first-generation home buyer requirement. On MyHome Assistance, the funds are always available. We don't run out of funds on the MyHome Assistance. Whereas on Dream for All, there's limited funding and there's a random selection process. MyHome does not have that process. MyHome Assistance does not have a shared appreciation component to it. It's basically you paying back the original loan amount plus any accrued interest. Whereas the Dream for All program has a larger down payment, but there's that shared appreciation component to the loan. MyHome Assistance has higher income limits, where Dream for All has specific income limits. On the MyHome Assistance program, you as a borrower can contribute an unlimited amount to go towards the down payment. Whereas on the Dream for All shared appreciation loan program, we cap the amount the borrower can contribute towards the down payment. But they're great programs. The Dream for All is definitely a unique program, and not all individuals that are selected on that program will be, not all applicants that apply or show interest to the Dream for All program will be selected. But, I just think that MyHome Assistance is a great fallback program, or you may even find that the MyHome Assistance is just better for you and what your future plans are. But in all, at CalHFA, we just hope that you have homeownership interests on your brain, you're thinking about it, you are considering being a homeowner and taking the steps to actually explore the options available to you to achieve your goal of homeownership. And I'm coming to an end. I thank you all for coming here, and I'm going to hand it over to Darren. I thank Darren for inviting me to give this information out to the communities. We just look, we find it very important to share our programs. We just want to get the word out there and spread the information out to everyone so they know that there are down payment assistance programs available to you. But Darren, thank you.
Yeah, you did such a great job, Natasha. Thanks so much. A ton of chatter in the chat. And thank you guys for all your engagement and great questions. A lot of amazing questions and really good thought that goes into this. And really, our job and our commitment as a company is to improve communities through the financial literacy process. It's why we're so aligned with agencies like CalHFA, because we know how important this is to you and your family and your overall ability to kind of secure your future. And so it's something that we're really passionate about here. Our job and our goal is simply to give you guys information and education so you can make a great decision. If you want to take the next step and connect, obviously we've put a few links in the chat and we're happy to support you guys through your home buying journey. We would never try to sell you anything, sell you a solution, or but simply we would like to have good conversations with you guys to help understand what your goals are, take you through a process designed to improve your kind of educational knowledge around the real estate, housing markets, et cetera, et cetera. And then we've included those links in the chat. We're going to send out a recap after this webinar with the recording so you guys can go back and reference those documents. I'm going to quickly share screen real quick and just pop up that QR code for a quick sec, just so you guys can grab that if you'd like. And let me share the screen real quick. So if you guys are able to grab that, try to scan that QR code. It's a great way to connect with us, get additional resources. We are going to be hosting another webinar on additional down payment programs and do a little bit of a recap in about a week. So if you want more information, there are some other great programs. CalHFA, of course, has probably the best programs in the marketplace, but there are some other great solutions just to be aware of for you guys. So thank you so much for your time. Really grateful to spend this time together, and incredible questions. Really excited to see if we can help some of you guys take advantage of this program, the other CalHFA programs, and any other any other goals that you have through this homeownership process. So thank you guys so much. Val, anything you want to add before we wrap?
No, I think you nailed it there. And so we'll send up follow-up and we'll be in touch if you guys want to take advantage of this program.
All right, thanks everyone. I know we missed a few questions. Apologies for that, but just in the interest of time and certainly Natasha's time, any other burning questions, Val, that we need to tackle before we say goodbye to Natasha?
Nope,
Yeah,
I think you did a good job.
Okay, perfect. Perfect. Guys, thank you so much for having me. I appreciate you for the invitation.
Thanks, Natasha.
Thank
Thanks,
you.
everyone. Really appreciate your time. Thanks so much.